Ever found yourself in a tight spot, needing a quick financial boost, and considered a loan from a digital lender like Branch? But then, the big question pops up: how long do I actually have to pay this back? That's what we're diving into today: the repayment periods for Branch loans. Now, before we get into the specifics, let's paint a picture. Imagine your washing machine suddenly decides to give up the ghost. Laundry piling up, the smell is, well, let's just say it's not pleasant. You need a new one and fast. But your budget is already stretched thin. A short-term loan could be the perfect solution to bridge that gap. But understanding the repayment terms is absolutely crucial to avoid getting into further financial trouble. Branch, like many other digital lending platforms, offers quick access to credit. This convenience is a huge draw, especially in situations like our broken washing machine scenario. But this speed and ease of access shouldn't overshadow the importance of knowing exactly what you're signing up for. Knowing the repayment period is paramount to responsible borrowing. It allows you to plan your finances effectively, ensuring you can meet your obligations without undue stress. So, what exactly is the repayment period for Branch loans? Well, the answer isn't a simple one-size-fits-all. Branch typically offers short-term loans, and the repayment period can vary depending on several factors. These factors include your loan amount, your creditworthiness as assessed by Branch, and sometimes even the specific product you're borrowing. Let's break these down. Loan amount. This is fairly straightforward. Smaller loans generally come with shorter repayment periods. Think of it this way: if you borrow a small amount to cover a minor expense, you're likely expected to repay it quicker than a larger sum intended for a more significant purchase. Creditworthiness. This is where things get a bit more nuanced. Branch, like other lenders, uses algorithms and data analysis to assess your creditworthiness. This assessment considers various factors, including your credit history, if available, your mobile money transaction history, and other relevant data points. A higher credit score or a strong repayment history with Branch may qualify you for more flexible repayment terms, potentially including slightly longer periods. Conversely, if you're a new borrower or have a less established financial history, you might be offered shorter repayment periods. This is a common practice in lending, as it helps manage risk for the lender. Specific loan product. Branch may offer different loan products with varying terms. For example, they might have a product designed for very short-term emergency needs with a very quick turnaround, and another product designed for slightly larger expenses with a slightly longer repayment window. It's crucial to pay close attention to the specific terms associated with the loan product you choose. Now, while Branch doesn't publicly advertise a fixed, universal repayment period, it's generally understood that their loans are short-term, typically ranging from a few weeks to a few months. This is important to understand. If you're looking for a long-term loan with repayment periods spanning several years, Branch is likely not the right option for you. To find the precise repayment period for your specific loan offer, you need to look within the Branch app itself. When you apply for a loan, before you finalize the agreement, you'll be presented with all the details of the loan, including the exact repayment schedule. This will clearly state the due dates and the amounts you need to repay. This is the most crucial piece of information, and you should review it carefully before accepting the loan. Think of it like buying a plane ticket. You wouldn't just book a flight without checking the departure and arrival times, right? Similarly, you shouldn't take out a loan without clearly understanding the repayment terms. Here are some key things to look for within the Branch app when reviewing your loan offer. Loan amount. Double-check that the loan amount is what you requested. Interest rate/fees. Understand the total cost of borrowing, including any interest or fees. This is usually expressed as an annual percentage rate, APR, but pay close attention to any other fees that might apply. Repayment schedule. This is the most important part for our discussion. The schedule will clearly outline the due dates for each payment and the corresponding amounts. Total repayment amount. This shows the total amount you will repay over the loan term, including both the principal and any interest or fees. By carefully reviewing these details, you can avoid any surprises down the line and ensure you can comfortably manage your repayments. It's also worth mentioning the importance of responsible borrowing. Before taking out any loan, ask yourself, do I really need this loan? Can I afford the repayments? Have I explored other options? Taking on debt should be a carefully considered decision. While short-term loans can be helpful in certain situations, it's crucial to use them responsibly and avoid accumulating unnecessary debt. Remember, missing repayments can have negative consequences. It can affect your creditworthiness, potentially making it harder to access credit in the future, and it may also incur late payment fees. So, understanding the repayment period and ensuring you can meet your obligations is paramount. So, to summarize, the repayment period for branch loans is typically short-term, ranging from a few weeks to a few months. It depends on factors like your loan amount, your creditworthiness, and the specific loan product. The most reliable way to find the exact repayment period for your loan is to check the details within the branch app before accepting the loan offer. Always review the loan terms carefully, including the repayment schedule, interest rates, and fees, before committing to a loan. Responsible borrowing is key to maintaining good financial health. With that said, thanks for watching, and until next time.